You're here today for your daily brief on real estate projects in Dubai. This time we're going deep into phase 10 of Nad Al Sheba Gardens. This community made early investors over $1 million in 18 months, and now it's back with phase 10. We'll cover layouts, price per square foot, yield potential, and how this phase stacks up against the earlier ones. And nearby competitors like District 1, Tilal Al Ghaf, and Arabian Ranches 3. Let's get into it. The developer behind Nad Al Sheba Gardens is Meraas, operating under the Dubai Holding umbrella. Now, Meraas is known for creating highly livable, design-driven communities like Blue Waters Island, City Walk, and La Mer. Nad Al Sheba Gardens follows the same ethos: premium finishes, curated landscaping, and a master plan focused on lifestyle rather than density. Now, the community sits just off Ain Road, behind Meydan and close to downtown. From the Burj Khalifa, it's about a 15 to 18-minute drive. That puts it significantly closer to the center than most villa projects in this price bracket. What makes the location special is its balance: calm and residential, yet you're not pushed out to the edges of the city. The master plan features a gated layout with looping streets, landscaped parks, jogging tracks, and upcoming retail and educational clusters. There's also good access to the new Ras Al Khor extension, which is expected to improve connectivity to Business Bay and Jeddah by 2027. Now let's talk product. Phase 10 includes 3 to 7 bedroom townhouses and villas. The layouts are diverse, and Meraas made a noticeable effort to improve on feedback from earlier phases. Let's start with the 3-bedroom townhouses. These average around 3,000 to 3,200 square feet built-up area and start at 5.1 million dirham, which places them in the premium tier but with significantly more space than comparable options. The highlight here is the open double-height living area, a private garage, and a fully private backyard. No shared walls and living spaces. These units work well for both small families and investors aiming for long-term capital appreciation. The 4-bedroom villas hover around the 4,000 to 4,300 square feet and start at around 11.4 million dirham. These include a maid's room, separate family lounge upstairs, and a semi-enclosed kitchen. Some layouts offer a central courtyard, which improves natural light and cross-ventilation, a subtle but valuable feature for end users. Now, the 5 and 6 bedroom villas are where you start seeing more ultra-prime features: floor-to-ceiling windows, 2 living areas, rooftop terraces, and options for private pools. The 5-bed villas start from 13.9 million dirham, while the 6 bedrooms begin at 17.7 million dirham. Certain 6-bedroom layouts offer a ground floor guest suite with a dual-access staircase, which is rare in this price range. And finally, the 7-bedroom ultra villas. These are limited and mostly custom figured. You're getting over 10,000 square feet of built-up area, massive plot sizes, and the flexibility to tailor interiors. Prices for these start at 24.8 million dirham. Best views: anything facing inward towards the parks and the green corridors offer the best long-term resale value. Avoid the outer rings units along the main roads unless you're getting a corner unit with extra land. Best layouts: in the 3 bedrooms, look for the U-shaped kitchen version. It adds storage and allows for better space division. In the 4 to 5 bedrooms, pick the layouts with side gardens rather than just backyards. They feel more like standalone homes. Now let's talk numbers. Phase 10 is launching at around 1,550 to 1,750 dirham per square foot, depending on the unit and orientation. That's up from 1,200 to 1,400 dirham per square foot in phases 5 to 8, which sold out between 2022 and early 2024. So we're looking at a 25 to 35% price increase across phases, which reflects both rising demand and upgraded product specifications. Compare that with District 1 villas, where prices range between 2,000 and 2,400 dirham per square foot for a finished product, and to Tilal Al Ghaf, which now crosses 2,000 dirham per square foot for larger villas. Even the Valley by Mr, further out near Ain Road, is approaching the 1,400 to 1,600 dirham per square foot for a 4-bedroom townhouse, despite being further from downtown. In that context, Phase 10 sits in a sweet spot premium product at a still reasonable entry price. Let's talk investment. Historically, villas in Nad Al Sheba Gardens have appreciated around 7 to 10% year-on-year since launch. A 4-bedroom villa bought in Phase 6 for 4.5 million dirham is now trading above 5.5 million dirham. That's a 22% gain over 18 to 24 months not including rent. With Phase 10 launching at a new price band, we expect continued upward movement, especially as the master community matures and facilities like schools, retail, and a clubhouse come online. By handover, your capital deployed will likely be 40 to 60% depending on your payment plan. If the market continues at 6 to 8% annual growth, you could walk away with 800,000 to 1.2 million dirham in profits on a 4 or 5 bedroom villa by mid-2028, assuming healthy resale demand. This is also one of the few freehold villa communities this close to downtown, and that matters for long-term capital retention. In terms of rental yield, you're looking at 5.5 to 6.5% net on a 3 and 4 bedroom unit if handed over today. These numbers could grow post-handover as the area becomes more livable and the tenant profile expands. But what's more interesting is the end user value. You get large plots, smart designs, and actual greenery, which is rare in Dubai new buildings. It's also a good fit for second home buyers from Europe or GCC nationals looking for peace and privacy. International investors will appreciate the liquidity and the upside, while local buyers often prioritize space, schooling, and proximity to downtown, all of which are covered here. So who's buying? In phases 7 to 9, we saw a mix. Around 60% were international investors, especially from Europe and Asia. 30% were GCC-based end users, often buying larger 5 to 6 bedroom homes. And the remaining 10% were institutional buyers looking at portfolio diversification. Phase 10 is expected to attract the same crowd, with increased interest from European families looking for lifestyle plus investment upside. Payment plan for Phase 10 is investor-friendly, with most units offering a post-handover schedule through early 2029. You pay gradually over the next 3.5 years with final payment due on handover, giving you time to ride the market while minimizing upfront exposure. This flexible structure is especially helpful for resale strategies or mortgage planning down the line. To wrap this up, Nad Al Sheba Gardens Phase 10 offers a rare combination of low-density design, downtown proximity, and above-average floor plan execution and size. You're not buying just a villa, you're buying into a lifestyle that's hard to replicate at this price per square foot. For investors focused on capital appreciation with strong resale demand, this checks all the boxes. And for end users, it's finally a community that feels like a long-term home rather than a rental flip. If you want floor plan previews, capital outlay breakdowns, or help picking the best units, reach out on WhatsApp. We're happy to guide you through the options. Like, subscribe, and share this with that one friend who still thinks villas in Dubai cost 2 million dirham. We'll see you in the next one.